Look at gold. It's outpaced everything but Bitcoin since
Yep.
2000. It's averaged 9.9% compounding per year. The S&P 500 with dividends reinvested is 9.4. It's doubled the performance of the 10-year treasury. It's the tortoise. It's not sexy. People don't notice it, but yet it's averaged nearly 10% per year. That's rock star. Richard Russell, my mentor, God rest his soul, used to say, you make 7% per year compounding, you're a rock star. Uh, that's kind of the problem, Danny, and we alluded to that at the beginning. The public instant gratification is not fast enough for the public, and it's not the way markets work. This is a very unusual time where fortunes are made in a very short period of time in Apple and Bitcoin and Nvidia, and that leverage does cut both ways. So, my advice to people who are sitting on all that profit is to understand that profit is not a four-letter word, and it's a six-letter word. And take some profits, put it in real assets like gold and silver, even Bitcoin. Anything that gets you out of the system, I think is very important. It's time to be a contrarian. It really is. And, there are ominous clouds lurking on the economy. And I think the biggest place to see that is in the reinversion of the yield curve, and the banks not lending, but the banks are the ones that are reinverting it because they're plowing their money into short-term treasuries, which are pushing down the rates of the short-term treasuries, which is reinverting it. It's not the other way around where, the market is the long rates are going higher because the system is healthier. No, it's the other way, which is very ominous. Instead of it happening naturally where things are good, you got the big money who knows what's going down saying, I'm not going to lend my money to Danny and Andy. There's too much risk there. Let's just put it in treasuries and make 5% short term. So they're loading up in short term treasuries, pushing down the yields, reinverting or uninverting the yield curve. And every single time since 1950, that tells us recession. The economy is in trouble. Nikkei down 12.4%, its biggest one-day drop ever on a Monday morning. I've been saying forever that the lack of preparedness in this country will catch people off guard. Things are going to happen on a Monday morning, on a Sunday night, especially many of these things that are happening across the globe, in the Middle East, in the BRICS nations in the Southern Hemisphere, where changes will come. They will catch people by storm. And if you haven't prepared, if you haven't stocked up, your preparedness war chest, if you will, your get out of Dodge bag, whatever you want to call it. And preparing doesn't just mean owning gold and silver. It's cash. It's batteries. It's food. It's water. It's home protection, and it's all of these things. It's time to prepare. The world is on razor's edge. Quarter of an inch separated relative calm, if you want to call it that, in chaos a few weeks ago. So much is changing. And when you talk about the Japanese government raising interest rates, of course, they've come out today and said, we're not going to raise interest rates anymore. Everyone relax, relax. Well, that, again, they'll just let their currency die, I guess. But the bottom line is that it's the largest one-day drop in the Nikkei history. It's the largest drop in terms of point percentage ever on the U.S. Dow. It's the worst day in 57 years in Taiwan, the worst day since 2008 in South Korea. This was not just isolated. This is everywhere. And pricking the bubble, so to speak, we are very close to chaos, it seems, on multiple fronts: political, geopolitical, markets, currencies, debt, and even morally and socially, and what's happening in the streets of the UK, what's happening in our own inner cities. And then you throw in this contentious election and all of the craziness around it. Yeah, man, there's a lot to talk about. But we had two orders,
Oh,
one of
really?
50 and one of 52 within about an 8-month period.
Wow. Wow.
And I've done this for 30, going on 35 years, and have never had anything even remotely that close on either side of it.
Wow. Wow. And why were you able to fill that order versus the other dealers?
Well, I've been doing this longer than anybody. We've done over 10 billion in sales in 34 and a half years. I have connections with all of the major dealers, all the major importers. It's a relationship based business. And so having relationships all around the globe, I was able to, within a very short period of time, in fact, the first one was over the July 4th weekend, and it was like on the first, we had 3 days to get it done, and we did get it done before the holiday started because I have access to a lot of people and my reputation is good so that people would extend on my verbal. They would lock in very large amounts of silver and gold knowing that they would be paid. And in a business that is as volatile as this is, you have to hedge your positions. If you agree to sell me 1 million ounces of silver, you're going to have to hedge that position because every dollar it moves, it's $1 million one way or the other. And so it's a situation where it's about reputation more than anything, and people knowing that I would honor my word. We're what's called an authorized reseller. There are 7 or 8 primary distributors, and there are 27 authorized resellers. They used to make a much bigger deal about it, but it just simply means that we are nominated by one of the primary distributors to be an authorized reseller. There's only 27 since 1986. The difference between a primary distributor and an authorized reseller is in essence a $50 million line of credit to the U.S. Mint. All the other conditions and commitments are more or less the same. But yes, being connected to the U.S. Mint, very high up on the food chain, has been a defining characteristic of my career for sure. I think there's going to come a time where there's going to be something that wakes up the very, very, very wealthy people in this country. We're starting to see it. The order sizes that we're doing now are really big. We don't have the massive amount of volume that we saw in other parts of the last 3 years where, the silver squeeze and everyone just getting a piece of it to make a whole bunch of money. And it's not sexy enough. The instant gratification is not there in gold and silver yet for those people. And so they've moved on to things like Bitcoin and Nvidia and Apple. Okay, I get it. Fine. But what we have seen is very, very substantial orders. And I swear to you, I've said this before, I believe there's going to come a time where you get some very wealthy people. I don't know how many billionaires are there in the United States now. 1,000, 2,000, 3,000? I don't know, a lot. You're going to get a couple of very wealthy people that say, give me every single thing you have right now. I'll take it all. And you're going to get people that will do that across the country and bang, it'll all be gone. And I mean that.
Customers, are they buying, selling, panicked? Anything you can share about what people are actually doing in terms of gold and silver right now?
Yeah, it's been a really very busy, busy, busy day today. I think people, Chris, realize that things are beginning to break. And they realize that a sell-off like this often happens counterintuitively. I never know what to make of it. People say the conventional wisdom is that you throw out the baby with the bathwater in order to meet, for example, margin requirements. And if you look at the unwinding of the carry trade, it would certainly, with the yen strengthening the way that it has been, it would elicit margin calls on these levered positions. And whether or not it's people selling their gold and silver because it's so highly liquid, or it's just the cartel's way of continuing to step on things to make the perception of gold and silver being the place to run, kind of trying to sever that relationship, which is more along the lines of what I think. People are seeing through that. The tricks and the methods that have been used for a very long time, I think, are growing long in the tooth, and they are becoming far more transparent to the investing public. And I would say today has been one of the busiest days we've had in months, literally, maybe even going back to last year when we had the banks fail. People are not dissuaded whatsoever. In fact, I think they're quite incentivized to see the value that is found here in a price that just got, clubbed. Although it's interesting with gold, it's back above $2,400 and only down a little bit right now. The futures I show only down $23.50. They were down as much as 70 plus earlier this morning. And so I think that this is a short-term knee-jerk reaction, but I don't think we're out of the woods yet in any respect as to how this all plays out. One other note, I think it's important when we talk about what gold is doing. and when you look at it in this in the light of Japan, where it looks like by all intent and purposes the wheels appear to be coming off. 10 years ago, an ounce of gold was about 140,000 yen. 5 years ago, it was about 150,000 yen. That's a 7+% change in 5 years. It was 200,000 yen in 2020 and roughly 250,000 yen in October 2022. In 18 months from 2020 to 22, the price of gold went up $25 in yen. It spiked to 278,000 yen in July of 2023. And as of just the other day, not too long ago, just a couple of days ago, we were over 383,000 yen. That's 38% increase in 1 year. So you can see as the yen has really gotten into trouble, gold has done what it is supposed to do, and it has gone much, much higher.